Welcome to the Nuts and Bolts of Due Diligence, presented by Just Elementary and Commercial Brokers. I'm Pramod Patel, and let's get started. Last time we covered the big picture of due diligence. So today we'll cover a little bit about some of the nuts and bolts you want to get into that you're going to want to consider when you're looking to buy a B2B business. Now, what is a B2B business, you ask? That would be any kind of non-retail business. So a manufacturing company, distribution company, and maybe even some specialized service businesses. Now, time for a little quick disclaimer. It's obviously very important for you to make sure you get the proper legal and financial advice. Just Elementary Inc., Commercial Brokers, and myself, we're not licensed to give you financial, legal advice. So what you need to do with this information here is just kind of put it in your memory bank, get a better understanding of what you need to do, so when you consult the right legal and financial professionals, you know what to ask and you know what to look for. Income statements are basically comprised of two things: a basic profit and loss statement and then a balance sheet. So a profit and loss statement is basically going to be, the numbers for a certain period, whether it's for a month or a year. It's going to have the gross revenues, the cost of goods, the general administrative expenses, and then the profit left over. A balance sheet is going to be a snapshot picture of all the accounts, the bank accounts, any liabilities, any loans, and so you know exactly what, as of that certain date, how much money is in the bank, how much money is owed. And balance sheets are going to be very helpful for you to track the financial health of the business. So if you have historical balance sheets that go back for, let's say, once a year for the last 3 years, plus one that's as recent as you can get it, you'll see whether the checking accounts, the business bank accounts are going up, going down, if the liabilities are going up, going down. And so you want to look for, obviously, some signs in the balance sheet that will correspond with the profit and loss statements. So again, a good forensic accountant will look through that and let you know their findings, but you can definitely see some stuff for yourself. When you're working with redacted lists and redacted P&Ls, especially customer lists by revenue and vendor lists by amount of purchases, you'll want to make sure that you try to get clarified from the people providing the paperwork that if it is such as customer A, B, C, and D, that maybe customer A and B aren't necessarily sister companies or related companies where they might be considered one customer entity or one vendor entity, because you want to have an idea of customer concentration. So keep that in mind when working with redacted lists. Any transaction that you're going to come across with a seller and maybe even another broker involved is that there's going to be a high degree of confidentiality on those guys' part. Now you're going to ask yourself, well, why? The number one reason is going to be is that they've got trade secrets to protect. For example, they may have some key customers or some key vendors, and they don't want any special terms to get out, and they also don't want key customers or vendors to find out, lest those vendors or customers change the way they do business with the company. So obviously you're going to be requesting a lot of financial paperwork, tax returns, income statements, payroll records, purchasing history. You can expect that at the initial outset of your due diligence, these paperwork items are going to come to you without the names exposed. We call it redacting. So you'll have the names blacked out or marked out, or a generic name like vendor A, B, C, D, E, or customer 1, 2, 3, 4, 5. Don't be alarmed with this. Obviously you need to work with it at the outset just to get a big picture understanding of the financials to know if it's something you want to proceed with further. Once you've gone and you're satisfied with all that paperwork and you've been able to remove some contingencies such as perhaps bank financing or equipment inspection, any other inspection that you need to do and get done, once those are done and the contingencies for those are waived, you're going to start to build a comfort level with your seller, and your seller's going to say, okay, now it's time to share a little bit of the names and other information. But expect that to happen much closer to closing than at the beginning of when you start due diligence. Once you actually have the paperwork in hand, you're going to want to look at it yourself, obviously just to know what you're looking at. And then most important though, you need to have some sort of financial advisor involved to help you with the analysis of the paperwork. You have a CPA that you're working with, send it to them. They'll make sure to ask them if they're comfortable with doing a lot of forensic accounting or reviewing paperwork in these kind of circumstances. And definitely if not, you're going to want to seek out and find some forensic accounting specialists. These are people who, theoretically for a living, go through a lot of paperwork, doing a lot of audits to kind of make sure that the numbers that they're being given are the real numbers. That's going to involve a forensic accountant going in, asking for a general ledger, even check stubs, the whole 9 yards, to really go through and verify that the money that is being reported on the income statements or the real amount of money is coming in and being deposited. Now, so you have the paperwork in hand. You know, going with the forensic accountant is really the best way to make sure you're not getting cooked books. You know, but you have to always look at it yourself to make sure that you know what you're being told by your accountant or your forensic accountant or any other financial advisor that you're using. So what exactly do full financials mean? To start with, at least 3 years of tax returns and the corresponding income statements that go along with them. You're going to want to make sure that the accounting method match, either tax returns on a cash basis or an accrual basis, that you get the income statements to match, either cash or accrual. You're also going to want a year-to-date P&L. So for example, if you're doing your due diligence, let's say in May of the calendar year you're in, you'll want P&L statements to at least be through April, if not maybe March, and then the tax returns for the prior year and then the 2 prior years to that as well. You're also going to want list by customer, so you can see if certain customers are falling off, ordering less, ordering more. And you're also going to want to see history with the vendors. Are the vendors, are they doing more business with a certain vendor or kind of spread out? This is important so you get a feel for the customer and vendor concentration. The more dependent you are on 1 or 2 sources, then the more eggs you're throwing into one basket. So be aware of that. Make sure to get the seller to make statements to you in writing. This is going to come in very handy in case you do have some problems or disputes that pop up after the close, because if it comes down to a he said, you're going to have big problems. But if you get it in writing, boom, you've got written proof of what was stated, and so you've got power in your hands. For example, when working with a certified business broker that is a member of the California Association of Business Brokers, they have access to forms that are called a seller disclosure, and in that disclosure, they have to answer a whole lot of questions on a yes/no basis, and then a lot of open-ended questions, and this is your way to have an idea that they're telling you the truth because they know it's going down in writing and it's permanent. And just for your information, there's also a buyer disclosure, which is always recommended for you to fill out to then pass on to a seller, because sellers also going to want to make sure, number one, you're good for the money, number two, you have the experience to pull off running the business, and number three, that you're being honest when it comes with your credit history and your background. Make sure to have your seller sign a form 4506. That's an IRS form. What that allows you to do is, as a third party, request a copy or a transcript of a tax return or tax returns that have been filed by another person. The reason why you want this is fairly obvious. You want to make sure that the returns being given to you by the seller or his agent or his CPA are the ones that have actually been filed with the IRS. We ourselves haven't had any problems with that with our clients. We've definitely heard some horror stories through other brokers of sellers trying to pull a fast one on their broker and their buyers by making up a tax return and giving it versus the actual one they filed. So keep that in mind. IRS Form 4506. So what to do when the unforeseen pops up during your due diligence, such as, a problem with a past workers' compensation claim, a unexpected regulatory issue, an unexpected city zoning issue. Anything can pop up, and what you're going to want to figure out is, if everything else is checking out the numbers, now you got this problem that's just popped up unexpectedly. You have to ask yourself, how long is it going to take to fix? How much is it going to cost? And just assume it's going to be double, unless you've actually solved these problems before, because working with any regulatory or municipal, county, government, state agency is going to take a lot longer than you expect and probably a lot more money to fix. So be aware that when one of those little kind of unusual problems pops up, really do your homework to get a handle of how much and how long it's going to take to fix. Only one of the few ways you're going to be able to get a good handle of that is to contract a professional in the industry that's used to solving problems like that and getting their input immediately. You obviously know you can't waste a lot of time during due diligence, so if it costs you something to get a proper consultant out, pay that fee and bring them in. Well, thank you for watching. We did our best to cover all the basics of the nuts and bolts of due diligence. Obviously, for more information, go to the website www.justelementary.com and look for more information there, and especially our contact information. Take care.